Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investment. I'm your host, Louis, and I'm excited to share today's stories with you. We're starting off with a look at two different economies, one in Europe and another in North America. Let's begin with Spain, where inflation has been on the rise. According to recent data, consumer prices increased by 3.5% in April compared to the same month last year. This surge in inflation is largely driven by higher energy costs and an increase in food prices. On the other hand, we have a story from Canada, where the rental market is experiencing a significant shift. In Toronto, landlords are offering rent-free months and gift cards to attract tenants due to a surge in new supply and weakening demand. This trend is not unique to Toronto. It's being seen across many major cities in Canada. The average asking rent in Ontario has fallen by 2.7% over the past year, with Toronto experiencing an even larger decline. It's interesting to note that while these two stories may seem unrelated at first glance, they both highlight the complexities of modern economies. In Spain, inflation is on the rise, which could have implications for interest rates and monetary policy. Meanwhile, in Canada, the rental market is responding to changes in supply and demand, which could have broader implications for the housing market. As we explore these stories further, it's essential to consider multiple perspectives and avoid making any hasty conclusions. The world of finance is full of nuances, and it's crucial to approach each topic with a critical and open-minded attitude. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're halfway through our show today, and we're about to dive into a fascinating story that's making waves in the world of trade and economics. You may have heard about the recent court rulings surrounding President Trump's tariffs. It's a complex issue, but don't worry. We'll break it down for you in simple terms. Essentially, a federal trade court blocked a large piece of the Trump administration's tariff agenda, only to be temporarily paused by an appeals court. Now here's where it gets interesting. Even if the lower court's ruling holds, there are still tariffs on the books that will affect consumers. We're talking about tariffs on products like steel, aluminum, and automobiles. According to a Yale Budget Lab analysis, these remaining tariffs could cost the average household around $950 in purchasing power this year. That's equivalent to a 0.6% increase in consumer prices. To put it into perspective, our expert guests have told us that car prices could rise by about 8% this year and 5% over the longer term due to these tariffs. And it's not just cars. Steel and aluminum are used in many other products, from home building to household appliances. So, consumers may feel the pinch in various ways. It's also important to note that the Trump administration has signaled its intention to impose duties on additional products like pharmaceuticals, semiconductors, copper, and lumber. This could be a sign that the tariff war is far from over. In fact, our experts believe that even if the Supreme Court ultimately rules against the country-specific tariffs, it may not mark the end of the tariff war. We want to emphasize that this is a developing story, and we'll continue to follow it closely. As always, we strive to provide you with balanced and unbiased information to help you make sense of the complex world of risk and economics. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're closing out today's show with a look at the ongoing trade tensions between the U.S. and its trading partners. As we've been following, President Donald Trump's Liberation Day tariffs have been at the center of a court battle, leaving importers and shippers uncertain about what's to come. Just recently, a U.S. Court of International Trade ruling threatened to kill or delay the imposition of these tariffs, but a federal appeals court has temporarily reinstated them. This back and forth has created a perfect storm of uncertainty for companies relying on international trade. Gene Soroka, executive director of the Port of Los Angeles, notes that business is softer than usual going into the traditional ocean shipping season for holiday merchandise. With 10 scheduled vessel arrivals canceled in June alone, it's clear that companies are hesitant to make moves without a clearer understanding of the trade landscape. The Port of Los Angeles, as the #1 ocean gateway for goods from China, is a key barometer for trade between the world's two largest economies. And with major retailers like Walmart and automakers like Ford relying on these shipments, the impact of these tariffs can be felt far beyond the port itself. Now, it's worth noting that the US and China did strike a deal to temporarily reduce tariffs on Chinese goods earlier in May. However, with the Federal Appeals Court directing the plaintiffs to respond by June 5th and the Trump administration to respond by June 9th, it's likely that this uncertainty will drag on for some time. As Gene Soroka put it, people are really wagering right now. Do I put my order in at elevated tariff rates? Could something change over time? It's a tough spot for companies to be in, and one that highlights the complexities of international trade and the far-reaching effects of policy decisions. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, invest with caution.